Palantir wins another massive army contract. And from the point of view of the governmental trust, we can probably start saying that Palantir is the most credible AI-serving company in the world. Another great news for the investors of this company is that Palantir will be included in Nasdaq 100 right before Christmas or on December 23rd. So of course we will talk about this news today. We will talk about why everyone are talking about Palantir. Do you still have a chance to buy until it's too late? And what to do with the stock of the company if you are already a shareholder of Palantir as I am. Hey there and welcome to the Market Monkeys channel. It's Julia here, and today's video I want to begin from an exciting partnership of Palantir with Red Cat Holdings. As I read somewhere on the internet, this partnership can actually redefine modern warfare. Red Cat's Black Widow drones, chosen for the US Army's Short-Range Reconnaissance program, will now integrate Palantir's cutting-edge visual navigation VNAV software and Warp Speed OS technologies. Palantir's VNAV software helps drones stay accurate over long distances by using the latest satellite images to correct their navigation. Red Cat CEO Jeff Thompson said this tech makes their Black Widow drones one of the most advanced tools for the US Department of Defense. This is impressive and much needed because, as those of you who are interested in wars and weapons know, that the recent warfare or the wars that are ongoing right now in the world shown us that drones are invaluable and often irreplaceable weapon that can save many lives. After the news, Red Cat stock jumped 14%, while Palantir stock rose slightly by 0.32%, and we will get to answer the question of why it rose so slightly a little later. And now I want to mention Nasdaq 100 inclusion and what can it mean for the stock of the company on December 23rd when the inclusion will happen, and what can it mean for the stock of the company in the upcoming year. In the last decade, stocks added to the Nasdaq 100 returned an average of 17% in the subsequent 12 months. And if you think about this for a second, it makes perfect sense. Because funds tracking the Nasdaq 100 like QQQ ETF, for example, will need to purchase Palantir shares, and in general Palantir's inclusion news came out in the time of this huge Palantir momentum. The stock source with no stop, some of this growth is thanks to the S&P 500 inclusion that gave Palantir shares 14% single-day spike in September and an 11% jump in November when relisting on Nasdaq. But the main question is whether all of these facts are already included in the Palantir pricing or not. By the way, if you find this information interesting, don't forget to support our channel by pressing a like button and subscribing. So Palantir's scalability is undeniable, but does the hype make up for overvaluation? I researched for many days and I tried to find some way to compare Palantir not to the market, not to the similar companies, because right now it doesn't make any sense because Palantir is so much overvalued, but actually to compare them to the fastest growing and the best SaaS companies in the world. Basically, we will be comparing Palantir to the SaaS companies that were hugely overvalued, but they made up for this overvaluation. So after this research, I found that analysts are making this comparison by using the rule of 40. This method evaluates SaaS companies by combining revenue growth rates with profit margins. A combined score about 40% indicates balance and long-term scalability. So Palantir is performing well in terms of growing its revenue, earning it a strong A grade for growth. In the last quarter, Palantir's revenue grew by 24.52% year over year. That's much higher than the industry median of 4.34%. Over the past 5 years, Palantir's average annual growth rate was 28.86%, but it was 15% lower than this historical average, which isn't great. Revenue growth is expected to slow, with forward-looking growth estimates at 22%. Next, let's look at profitability and try to get the rule of 40. So Palantir's net profit margin is around 18%, meaning it keeps 18 cents of every dollar earned as profit. Adding its forward revenue growth rate of 22%, Palantir meets the 40% benchmark, which indicates balanced growth and profitability. But if you measure profitability by other metrics like EBIT margin or EBITDA margin, Palantir falls short of 40%, but I would say that they will be achieving the rule of 40 because in my opinion there is a chance that Palantir will have a forward revenue growth rate higher than the expected 22%. So as I already said, there is simply no reason to compare Palantir PE ratio or PEG ratio, it's PE ratio divided by growth, to any other company or to the sector because they're so much overvalued. If we will take a look here, we will see that their PE is almost 10 times the sector median, so it will make much more sense to compare Palantir's PE to other companies that also pass the rule of 40. And we will not do this by ourselves because McKinsey actually did it for us. They say that investors reward companies that are at or above the rule of 40 with consistently higher enterprise value to revenue multiples. Moreover, the higher the number, the greater the gain. Top quartile SaaS companies generate nearly 3 times the multiples of those in the bottom. So, SaaS companies that meet the rule of 40 typically trade at an average valuation of 12 times enterprise value to sales or EV to sales. The best performing companies, not in this sector, not today, but in general in the world over time, in the top 25% trade at around 22 times EV sales because investors are willing to pay more for exceptional growth and profitability. Now let's look at Palantir. Palantir's current EV sales ratio forward looking is almost 60, which is much higher than even the top performing companies in the industry. This is funny. We've compared Palantir to the sector. They became overvalued. We've compared them to their peers, they became overvalued again. Then we thought, okay, we will not be comparing PE ratios, we will be comparing PEG ratios. It's PE divided by growth because Palantir is growing nicely. And at some point, they became overvalued by the PEG ratio as well. Now I found a way to compare them to the best, to the fastest growing, and to the most profitable SaaS companies in the world ever, and we get that Palantir is still 200% overvalued. Now pay attention, we're getting to the most important part of this video. The fact that Palantir stock continues to grow doesn't mean it's not overvalued. Basically, this is one of the reasons why I am selling this stock while it's growing. Everyone has different risk tolerance, and for example, I know about myself that when my position loses 30, 40, 50, 70% in a span of couple of days, I am stressing out. I am not taking it well. For me, it will be better to sell right now, to take maybe not all of the profits, but some of them, and to re-enter a little later when the valuation will be back to the normal levels. By the way, for those of you who will be watching my video for the first time, I want to explain that I am holding Palantir for over 3 years already, or almost 3 years already, and I have two portfolios. One is a long-term and another one is a short-term with more risky stocks. So of course Palantir is a part of my risky portfolio, but I wanted to hold it for a long time. So in general, to answer the question what is going on with Palantir, I want to talk about what is happening with all of the market. I have been having these thoughts for the past 6 months or so that it cannot be. I get that inflation is getting better. I get that there is more jobs, but still the overall situation in the world is unstable. We're actually in the middle of two huge wars. Several more wars are a possibility, and Trump wants to cut the rates to zero, bringing the inflation back up, because that's what happens when the money are getting cheap. People are going out, people starting to spend, and more demand means higher prices. Together with this, Trump's administration wants to cancel any student help, give away mortgages that God only knows how people will pay when the rates will go back up, and they definitely will, because if they will cut the rates right now, with the unstable overall economical situation in the world, the inflation will pick up eventually, and whether it will be Trump's administration or any next one, they will need to raise the rates once again. I mentioned for a couple of times in my videos that I'm cautious about the market, so I decided to research and to see whether there were some recent studies that can show us what is going on, and I actually found something really interesting. So take a look at this. The S&P 500 currently has a forward PE ratio of 22.3. That is a premium to the 5-year average of 19.7 and the 10-year average of 18.1. The stock market has not been so expensive since April 2021, according to the FactSet research. In fact, the S&P 500 has only reached a forward PE ratio about 22 during 2 periods since 1985. The first time was the dot-com bubble. The forward PE multiple drifted about 22 in 1998. Listen carefully, generally stayed about that level for about 3 years. The S&P 500 ultimately declined 49% after peaking in March 2000. The second time the forward PE ratio topped 22 was the COVID-19 pandemic. Investors underestimated how profoundly supply chain disruptions and stimulus spending would impact the economy, and they bid many stocks to the absurd valuations. Doesn't it sound familiar? Investors underestimated a world's situation and they bid the stocks to the absurd levels. To me, it sounds exactly like Palantir, like Sound, like SoFi, and many other companies on the market right now. After peaking in January 2022, the S&P 500 eventually declined 25% amid the fiercest inflation wave in 40 years. So as you saw, by this metric, the situation doesn't look great. But I need to say that it probably wouldn't be right to take only this research and only this metric into account and to say that markets will definitely crash, because our lives are very dynamic and everything is changing pretty fast. But if you take into account everything that happens in the world, how on earth does it sound logical to you that the stock market is rising that much? From the other point of view, I must say that I may be biased in this question. I might see the situation in the darker light because I am originally from Ukraine, born and raised. All of my family are still living in Ukraine, and for the past 8 years I am living in Israel, which also is not the safest place right now to be. Let's get back to the stocks. Often when I say that this or that company is seriously overvalued, I am getting many messages from you asking, so why the stock continues to rise, or so why the people are still buying, or for how long will this growth continue? I always say a few things. First of all, the movement of the stock price does not reflect anything besides of the movement of the stock price. This is a very important thing to remember, especially for the new investors. Good results, good or bad news often do reflect what the stock price will do, but the stock price itself doesn't reflect anything. The stock price itself doesn't give you any new additional information. Second of all, the famous phrase of economist John Keynes explains in a few words everything you need to know about the markets like that. He said that markets can remain irrational longer than you can remain solvent. Print it out and put it on your wall. As we saw from the article that I showed before, during the dot-com bubble, the forward PE multiple drifted about 22 in 1998 and generally stayed about that level for about 3 years. So if the market is overvalued, don't expect that it will quickly fix itself. This rally can go on for a long time. And third, why do people continue to buy? I always say that right now it's because of the hype, right now it's because of the over-positivity of investors, and I actually found something that can support my claims. In the same article, they say that in November, the conference board is a non-profit business and research organization that tries to predict what will happen in the business world in the future and to explain the different phenomena in the business world. So in November, the conference board survey found that 56.4% of US consumers expect the stock market to rise over the next year, and this is the highest reading on record. So people are insanely positive right now, and we actually have a research to support this. That may sound like good news, but Morgan Stanley sees it as a contrarian indicator signaling irrational optimism at a time when valuations are stretched. So as I said, we are facing over-positivity on the market, and it seems unreasonable, but it can stay unreasonable for a decent amount of time. So every single one of us must decide what he wants or she wants to do and what he or she believes in. For me personally, I am happy to cut the upside to mitigate my risks, and this is basically what I am doing. My average selling price of Palantir right now is approximately $50, and some of you are telling me that I could have earned more, and you are correct. But this is the thing, I do not want to earn more. I want not to lose. And this is basically the balance that I found for myself, and this is one of the most important things that I suggest you do for yourself. Find this balance for yourself with being comfortable not to earn as much as the stock grows from the one side, and not to lose too much, and to be comfortable with your position on the other side. So as you already realized, I would rate Palantir as a sell, but sell does not mean close your position, short the company, and buy a banner that says I hate Palantir and put it on your house for everybody to see. No, definitely not. I would rate Palantir as a sell, but I am myself still holding this stock. As I already said, I am mitigating my risks by slowly selling this position, although I was planning on holding Palantir for a longer time. But for me, I would feel very uncomfortable if my portfolio will right now crash by 70, 80 or 90% because of Palantir. I am holding a big chunk of it. That's why don't forget and always do your own due diligence. My opinion based on my feelings that the market is overvalued. If you feel the other way, if you think the market will grow, you will make completely different decisions. But Palantir as a stock is overvalued, and it's a fact. Doesn't matter how you look at this, if you're comparing it to the sector, if you're comparing to the peers, by the PEG ratios or even by the rule of 40, it's still highly overpriced. My job is to deliver interesting information. Hopefully it was valuable and hopefully it was helpful for you. Hopefully you found something new for yourself in this video. I thank you for being with me. Don't forget to press a like button, subscribe to our channel. I remind you that we have membership on our channel, and I hope to see you on our channel next time. Happy investing!